The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman. This is the last trading day of the year, not the last trading day to come, but the last day of 2012. And it's always interesting to me that I guess it's for bookkeeping purposes that they keep the market open all day. Normally, it's just it's one of the lightest days of the year. Basically, you've got the third shipment there while the captain's out for the long weekend, and you've got and they're I guess what I've always found is that probably the people who are left in charge have to follow the market. They just better not be doing anything that the market doesn't do. So if the market's running, they have to do buying. If the market's pulling back, they have to get out. So it's kind of one of those days where, yeah, a little bit of movement can be slightly accelerated. But of course, today, what do we have? We've got, now the Senate is reconvening on the fiscal cliff. I've been talking about this. So many people have been talking about this. I've been here long enough in the United States to know that whenever there is an issue, I'm holding up my hand right now, and I'm making a fist. I'm pointing my fist in this direction. It takes a long time before you can even get to close the hand to make a fist, to get it to an exclamation point where you want to get to that particular target. And then what happens is, the eyes are just move towards that target, and then they focus on that target. But actually what's happening, it's the left hand, the other hand that's doing it's the sleight of hand that does the work. And eventually something gets passed, money gets pushed over to that target, which never gets spent on the target. Everyone thinks that it's resolved, but it's this little thing, that other hand, that does all the tricks. And then you find out much later that the little fine print that nobody was looking at suddenly pops up, and the fine print, the pica starts at 0.3, and eventually that pica, that's the height of each letter, just gets bigger and bigger and bigger until it becomes the focus. And as it becomes the focus, the left hand starts to do this little juggling in the sleight of hand, and it happens over and over. I've been here since the oil crisis of the 1971-72 period. I've heard this over. Has anything been done since then? Well, that also is the excitement of the United States. Things eventually do get done in a kind of a muddled way. But in a sense, democracy is always working because it's the power of the people. And if the people aren't prepared to stand up and say, this is absolutely what we want, get it done, or you're out of office. But then I have to talk about something else, because people are sheep. I'm a sheep. You ask me about sports, I'm going to only repeat, if I even have heard it, I'll repeat what I've heard, because I don't follow that closely. I play sport intensely. I play tennis, but I don't even follow who's up and who's down. My tennis game is the only thing that counts to me, keeping fit and being able to play. So in everything else, I'm a sheep. I have to just listen to what's being said. This is what's really important. Keep your eyes on the ball. I had a really good question here, and the question was, when I talk about the Golden Cross and the Death Cross, that is the 200 period moving average crossing the 20 moving period the 50 period moving average. Although some people go to the 20, but let's say the 50 first. 200 over 50. And what I said, my answer was, it's almost like the head and shoulders pattern. When you finally actually get the confirmation, a huge chunk of it has already been done. So I just do not dismiss that as a technical indicator, except it is a terrible lagging indicator in my work. Hey, here's another thing. What if someone's using the 200 period exponential moving average and not the 200 period simple or the DMI? A lot goes into this. All I can say is, if you are using a particular indicator and it's worked successfully over and over and over, keep working at it. Keep using it the way you have used it. That's the way you build up your own integrity on a particular technique, is to be able to repeat the performance majority of the time, and I'm not saying 51%, when I say majority of the time, most of the time my implication is it's pretty much like in the 70%, 75%, or I prefer much higher, like my trin gauge, ChapmanWave trin gauge, has an unbelievably strong setting in terms of accuracy. So try to keep as steady as you can. Don't get too carried away with different indicators. And yes, I think it is important, but all I can say is that I use the 200 period exponential moving average. Majority of people use the simple moving average. So I don't use it that way. But if you look at the dashed line of the Dow right now, thank you, Steve, for a great 2 hours. You just did a fabulous job. Straight off me, another wonderful technician, very perseverant. Trade what you see, and that's just absolute Larry all the way, because he uses a methodology that he sticks to. Just as Steve has these candles, he talks about them with great passion, and he's done a fabulous job. He's got a great workshop with these candles. Plus all the different techniques. I was busy working, so I wasn't sure, but I think he was talking about the different cycle dates, one of his lunar cycles. Just looking at the chart, I can see how successful it is. Consider these things. Then you've got Daryl Martin shows you another way of trading here, another way of using technical indicators, managing your risk to the very best extent possible. I mean, the risk to reward in some of those trades that he discusses are fabulous. It's a different technique, of course. Then you've got Dave White, and Dave has something really unusual. He's a power vector, and Dave likes the bigger picture. I like the fact that Dave likes the bigger picture. I myself tend to try for the big picture, but I always have to start off with the short term. I like to use my 120-minute chart, daily chart, weekly chart, monthly chart, so I can get all the different time frames in. So Dave's program is fascinating because he uses techniques for me that I don't use at all, and it's just really important to be able to garner information and knowledge from everyone here. Then, of course, you've got Ken Shreve, who not only does Investors Business Daily techniques, but his own variations of those techniques, and he uses them. When he talks about breakout investing, he talks about getting those stocks that are breaking out to new recovery highs and why he chooses some and not others. Really important. Then, of course, you've got Tom O'Brien comes back on at 4 o'clock till 6 o'clock, and Tom does a fantastic job talking about how he uses volume, how he uses the different Fibonacci's, and also how he uses price and the look-back period to gauge where you can, what volume bar you can use. So we have shows all the way through. Now, that I wanted to get this little I want to get some of the things out the way that I need to discuss. The other is, I have to thank you. I have to thank those of you. I can't tell you how many people have signed up to get my CD introducing the ChapmanWave methodology, plus my opening call. Today's the last day. Let me just show it right here for those of you who might be new to this because you've got a day off and this is the first time you're hearing about it. Right there, front page, it says, save 50% on Basil's CD book, plus get a free month of his newsletter. So my CD goes for $249, being sold for $124. My very comprehensive daily report goes out every day with about 5 or 6 different charts. But my main thing is the Traders Corner. You go to Traders Corner, I give you the little summation at the top of what's going on, and then all our different, about 12 to 17 different bullet points on the diamonds, where the parameters are, the S&P, the Qs, the TLT, the GLD, etc., etc. Plus the stocks we have. And right now we have 3 stocks long. We are long, and they're doing very nicely. And we got 3 stocks short. And, in fact, all 3 are in a winning position on the short side. So it's very important that one gets an overall picture. So thank you. Go to the front page. You can still sign up. Now, because we had such an influx and a lot of people wait until the last minute to actually sign up, we've had to print new ones. They will be done just as soon as possible. I'm going to see to it that they're overnighted to TFNN, and we'll get it out to you as soon as possible. I really appreciate your indulgence for me to be able to discuss this, to be able to show this. I thank TFN. It's a lot of work for them. I appreciate everything that's been done. So those CDs, yes, this is the cover. This is the cover of the CD, if I can just get there right now. That's called Introducing the ChapmanWave Methodology by Basil Chapman, Chart Analysis in the Stock Market. There are 476 slides. It goes right from the very beginning, getting started, the technicals. What are the technicals? How to use them? Trends. I love this one. Look at this. These are look. You see that chart right there? If you're looking at Tiger TV, and my shows are archived on Tiger 11. Channel 11, but right now we're in Tiger 1 during this particular show. Live. So using ChapmanWave methodology, look, here's a chart, and it shows you a blank chart. I don't even use, yes, I do use candlesticks on this one, but you don't even have to, because I'm only going for the high of the bar and the low of the bar. And look what happens. In terms of the larger trends, I talk about this very much. If you're in a downtrend, you want to be looking mostly to the short side. Yes, you can see some of the counters I've got right now. I've got counter trend stocks that I think are going to hold up well. They have been doing very nicely. I would like to keep them through this period if we can for a nice big bounce. They should participate on the upside. Otherwise, we'll get stopped out for a profit, but not nearly as good a profit as we had the other day. But my weekly charts are still strong. I'd like to keep them. On the short side, it's important to look for stocks that have possibly made a major turn in the monthly charts, because you want to not short on. Doesn't this chart look wrong with the arrow coming down? You do not want to be shorting in a chart that is obviously moving higher. Well, how do you know it's moving higher? Make it simple. Higher highs and higher lows, and that's what you want to be looking for. On the way down, you want to be looking for lower lows and lower highs, and that looks wrong when you see that arrow pointing up, and you can buy those little blips to the upside, but your major trend is to the downside, and that's really what you want to be buying. Doesn't that look right? Well, then I also teach you how to use the MACD, the moving average convergence divergence. You see that line up there? You see the little gray line? Well, look, the price followed it all the way up to the top. You see the downtrend line over there? And in front, I teach how, and the stochastic, a certain level is really good. It's a comfort level. It's talked about as being oversold. And I say, no. Oversold, you want to be up in that area. You want the stochastic to be up in the 80% area or higher. That's good. That's good action. And if you're short, you want it to be getting down towards the 20% and lower, and holding lower. So I just wanted to go through that. Oh, there are all sorts of things. The sell signal by frequently asked questions. I even give you quizzes along the way, and then I give you the answers. And then I teach about the restart. How sometimes you can get a buy signal, but it could fail. And if it fails, you get another buy signal. Eventually, when those buy signals work, they actually, if they don't break the left side low bar in that pattern I call the dreaded H. Dreaded H is a pattern that looks just like a lowercase h. No, it's just a visual thing. I'm very visual. And yes, I use mathematics, but actually it's the visual part of it that's so important to me. Look, that's the pattern that we're looking at. That's that arch that breaks the left side low bar, and that's exactly what we got. This goes out to my subscribers every day. You see this? See those little arches that are coming down? Look at this big arch that's forming here. I'll talk about that and a couple of other things that I will get into, and we'll go straight to the charts, looking at everything we can in this last trading day of the year. So I'll be back. Basil Chapman down. Oh, I didn't give the numbers down.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. We're back. Basil Chapman. I just want to finish the thought here. You know, I'd spoken about the United States economy, back in the late 1990s, as being like a super tanker. You cannot. It's not a speedboat. You cannot change a course in a split second, and that my long-term projection was that at some point, the United States auto companies will get their act together, and we will become, once again, a predominant producer of automobiles, and that countries around the world, no matter what they say, will still want to buy American products and American cars. And that was number one. Number two is because we're a super tanker. I remember I used the term over and over, and then suddenly Abby Joseph Cohen started using the term super tanker. Then, of course, that's when it became a popular term. But the super tanker concept is that this is such a big country. It is enormous in every way. And that to turn a corner takes a lot of steps. It takes a lot of steps by a lot of people. Even though eventually it always turns out that a conglomerate comes in and you have 30 different in one sector, and then through attrition and through amalgamation and buyouts, etc., you only get 3 companies like you had the 3 automobile companies. It just happens in so many fields. Probably that's what's going to happen in the apparel industry now. We're going to be seeing that happen. Well, that means that the long-term projections that one talks about are being put in place right now. And that's why a lot of what's going on is really important. So Okay, that's enough out of the way. The Dow's up, it's unchanged. Nope, it's down 1 at 12,936. The S&P is up 3 at 1405. The comp index is up 17 at 2977. Apple's had a nice day today. It's up 13 at 523. That whole 504 to 500 area, going to watch that real closely. You've got, what is gold? Gold, I believe, is up. Yeah, gold's up 5 at 60. I just consider whatever it is here a bounce in gold. I'm still looking, other than counter-trend rallies, I'm still looking for a real big washout before we get the low in gold, and I don't see it coming real soon. Silver is at 30.01. It's up 0.35. Platinum's up 5. But now this is interesting because copper's still hanging in there, 3.6. I'm going to watch copper. There's nothing much to say. I'm just watching it closely. Now, T-bond futures are down 16 at 147 and 28 seconds. To me, what is really important about that is that in the context of what we're looking at, the TLT, let me just move the chart here. I'm going to go to the TLT. The TLT, which is the Lehman 20-year T-bond fund, has made a peak B, and it's really holding within a beautiful sideways rectangle trading range between about 119 to 118 on the downside. And I would say at this particular point, I'm going to put the upside limit to the 125 to 126 area. 127.19 will be absolutely key if it breaks. Now, important to me in the context of everything that I'm looking at is the relationship of the three bears. That's VIXI, Dolly, and Bondi, the volatility index, which went to 23 on Friday. The sustainability of that 20 over in the 20s. Remember I said it's not good enough to have just a quick pop into the 20s that's happened before and then a pullback. It's the sustainability. I don't care what happens on in Washington. I don't care what happens on Wall Street. I do care very much that if the volatility index on a weekly basis had 1 week above 20, it was close at 2270 something. If there is a second week, if this week the volatility index closes up in the 20s, up near the 24 area, it's saying be really careful about the long side. You can have stocks like we have in my portfolio. We have longs that are holding well. Holding well is one thing, but rallying strongly is another. And if those stocks are not rallying strongly, you've got to raise your stop so that you do not take a loss in your longs. On the downside, there are sectors now. More and more sectors. I'm seeing monthly hat-trick tops. That is, the daily gave a major sell signal. You have to then wait for the weekly to give the sell signal. The daily then goes to a sell mode, and the weekly goes to a sell signal. Suddenly, the weekly goes to a sell mode, and that impacts the monthly. And finally, you've got the monthly that goes to a sell signal. Notice the derivation of each level: sell signal to sell mode, shorter time frame. Next time frame, sell signal to sell mode. Then you go to the major one, which is the monthly chart. And that monthly chart, and I'll discuss that in a moment when we get back, and I had a question in the den if I would look at SWHC, that is SWHC and RGR, those are the two handgun companies. The gun companies and ammunition. I will look at them, sure. But in the meantime, what I'm looking at here, and I'm going to take out one of my charts, I'm going to put in another one to show you the triple yield price movement. I'll be right back. Basil Chapman, 8.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. So here we are back again, and almost the last trading day of the year. And we're looking at what I call that I send subscribers. I show them almost every week. The weekly chart of the 30-year T-bond yield, that's the white chart if you're looking at TFNN. The 10-year T-note yield, that is this golden color. And the cyan light blue color is the T-note yield. This is the FVX. So TYX, TNX, and FVX. And you will see that back over there, that was right on in June of 2007, there was this cluster formation where they all came together. Look how they opened out. You got this huge spread back at, I'm not going to go through the ChapmanWave at the moment on this, but back around about October of 2010, the difference between the three yields was really big. Then they were apart. They went to a peak, even the ChapmanWave back in the 48s area, came tumbling down. And then what happened was, I was going to change that. That's what I was going to do. That was not 48, if I remember. Yep, 47.89. I knew I made a mistake. Just visually, I could see it, 47.89, and make that yellow. There you go. Okay. So when it made that 47.89 high back in February of 2011, the yields really started to plummet. And they went to trough E, and they rallied up to a peak D in the 30-year, 34.90, so 26.94 up to 34.90. All the way down to this 24.52 level. But you realize that the real low is 25.19. back on, let me just double check it. Oh, is this being smoothed out? Yeah, 25.19, December of 2008. That was the real low that we were looking at. And then you went for a 3.5 year period before it was retested at 25.10 on the 30-year and then 24.62. Meanwhile, the 5-year was dropping precipitously, much sharper, and it went all the way down to the from the 11.85 low of 2008 down to the 5.41. It's 50%. Less, yes, more than 50%. And now it's making this rectangle formation. That's why I'm saying, when I spoke about bonds the other day, I said if someone asked me about the TLT and said that the Dow's moved down many hundreds of points, where do you think the TLT is? I would have said up in the 125 to 126 area. Meantime, here it is at 122.33. My reasoning, it goes like this. I believe that, like the dollar, the rule was whack-a-mole. Every time the dollar tried to get up, the Fed knocked it down. So even though internally it looked like the dollar was having a really strong rally, in price it didn't come out that way. It's the exact opposite now with bonds. At this particular point, the Fed is still saying, we want to keep rates as low as possible. So while technically I'm pretty sure that I would have got some kind of a sell signal in the monthly chart, at this particular point, I have to say, that's being negated because the hot air, the helium from Washington, is pushing the balloon higher and higher and keeping it up. And then it pulls back. It won't drop like it should because that hot air, the nozzle is still open to keep that hot air, keeping the balloon. And for those, especially of those of you down in Albuquerque, you know how magnificent it is when you see those balloons going up in the when they're starting to take off at 7 in the morning, 5 in the morning. Well, I can't remember what time it was when I was there, 5:30 or 6:30 in the morning. Suddenly those balloons, it's dark, and those balloons, helium balloons, they start to move up there at the balloon festival. So that's what we're looking at. So the yields, I don't think, are going to be the clue. Now, if you look at the this particular chart here, I found it fascinating when I overlaid this chart. The yellow is the Dow. And the Dow is trying to test the previous all-time high back at the 14,190 area. But look at this. The red one is the 30-year T-bond yield. Now the yield is it's struggling to make lower lows. The Dow is struggling to get towards the old high. This year is T-bonds. T-bonds are starting to form cluster pattern. So this says to me, this is a time that you can consider when you go to your monthly chart, and I'm going to go there right now. The monthly chart, I'm just going to skip from the TLT to the Dow because I wanted to discuss this in terms of the relationship of, for those of you still interested, if you want to go to the front page, check out my CD and check out my newsletter. You will see that there was a peak F top. That's the sixth highest peak from a buy signal to a buy mode. It's where you've got to be real careful, especially in the longer term charts. And back in October of 2007 at 14,198, there was a doji candle, an ugly bar the following bar in November. And what I'd say is if the 9-period moving average is pierced at the close on December the 31st, that's 5 years ago, that would give me a sell signal in the Dow, which could very quickly go to a sell mode if the price starts to go and stay underneath the blue line. You see that blue line, which is the 9-period moving average. At the time, it was a yellow line because I was looking at a black background chart. So now what we've got, you go down to trough E at March of 2009 and 64.69. Remember, that's when I got a buy signal the very day of the low, March the 6th, on the Dow Diamonds, which we had at 65.50, I think it was, for a very long time. Now what we're looking at is we've got a peak F, but the candle formation of the peak F so far is not yet very negative. And the following month, which was, this is after the high of October, you remember the S&P made a high in September. The Dow squeaked on that Monday to a new high, or the first day of the month, and then pulled back. And yet, today we're going to see whether or not, by the close, the 9-period moving average becomes a resistance or a support level. But the stochastic is at 84% and the MACD is only turning down now. Look, this is a completely... Learn these chart patterns. I discuss it in my CD introducing the ChapmanWave methodology. I discuss the MACD. I have a whole section here that says, let's find it. It says find, and I'll talk about the MACD. And there it is, MACD. So we're going to go to, funny, it picked up bonds right here, bonds at 111, but this is way back in 2005. Let's just see if I can do this. Okay, there's a lot of talk about. There it is, the MACD. That shows you, that demonstrates how the MACD works, besides all the intricate work that I give you on the MACD itself, on the makeup and how it's formed, who developed it, and how it's used in my particular methodology. So look, same reasoning. The stochastic was failing on that peak F. Look what happened. Yes, the stochastic is failing, but the MACD so far is holding well, and the beta, the distance between the fast-moving average, the green line, and the red line, is still very tight. And that says to me, I don't want to go out on a limb just yet and say I've got a sell signal in the Dow, even though it's leg F, peak F, because there could be an alternate wave count because of the strength of the technicals. If I see at any point that the wick of last month, which goes down to 12,471, and between 13,025 and 12,471, that is that's a 530 point distance. That is, if I see that by Monday a week, by today a week, the close on Friday, and then Monday a week, if I'm seeing that the Dow is starting to struggle and is starting to slip underneath 12,700, I'm probably going to be giving out information that says, now I'm close to a sell signal in the Dow. The end of January is what I have to wait for any confirmation of any sell signal. But I'll get a heads up based on the weekly chart. So that says, all right, there's that beautiful support line with the inside track on the ChapmanWave CD. I talk about the inside track between the green and the red lines. On the CD, I hadn't yet developed the coloration, showing that if it breaks under red, it's bad. If it holds between green and red, that should be support. And on the upside, it's the same thing. It's inverted. So, but the lines are there. I use dashed lines and solid line. So the dashed line inside. So this inside track says the Dow's got a lot of room before you really get a sell mode. And the sell mode will start underneath 12,100. So I'm making it real simple. I'm looking big picture. Short picture, let's go to the weekly chart. And the weekly chart says, hey, that was a lousy close on Friday. You closed underneath the 9-period exponential moving average, the blue line there. The stochastic is weak at 52%. The MACD is deflecting lower. It would take a very strong move above the high of Friday, 13,190. Certainly a close above 13,366 in the next week would be very important. Why? Because it'll say, hey, your monthly is being saved by the weekly, and the weekly says it could retest the previous high. So what have I done for my subscribers? We are in the DXD. We are short, 200% short from quite a way back, from the 19th of December, I believe it was, via the DXD. And we're making a nice profit, and we should not take a loss because I've got the stop above, nicely above our entry point. So we could definitely not make as much as we could have, say, early this morning when the DXD hit 49 something. It's not a big deal. It's the position that I had to take because it was a peak F in the ChapmanWave. Look at the beauty of this fast-moving average of the MACD going up. Look at the beauty of the price going peak A, B, C, D, E. And the song, I'm not going to sing the song, I won't put you through it right now, but the song says that the price can go to peak A, to peak B, even the anticipated C and D. And as long as the technicals are strong, you could suddenly go to E and F, but that's when a bell rings so loud it could make you deaf. And that is because there was a failure. Look at the failure of the stochastic to confirm the 6 highest peak F. That's where you can see the sharp move. And what does it go down to? It goes right down to the 200 period exponential moving average. That is Look how important the support is. That's where it stopped. So if it rallies now, it could have a test on the daily chart of 13,085, the 9-period moving average. If it starts to fail by, what is today, Tuesday, Monday? So by Wednesday afternoon, Thursday morning, if it's starting to fail, and the market sees no real resolution, whatever the resolution is that the market wants, then it's going to break out under today's lows. And the stochastic saying, yeah, we could try to rally, but we're at 24%. Chances are we're going to go underneath 20%. And the wide beta between the fast-moving average and the slow-moving average, which I talk about in my CD, that says be careful, because any rally needs to see the fast-moving average go back over the red line, that slow-moving average. That's going to take a bit of work. So my bias right now is to be looking to the downside regardless of what is happening. We have some long positions. Who knows, by today we might be stopped out of some. I don't care. I'm making sure that we are trying our very best to maintain profits wherever we can, and to be able to identify the trends in the longer term when monthly charts come in for a potential hat-trick top. So, got that out the way. Now let's talk about other levels. The volatility index. Now, I needed to go back to the black chart because that's got it all now. Oh, just one quick thing while I've got this here. You see this here? This is the UUP and the GLD. The UUP and the GLD, you see the way that the UUP has made an H formation. So far, it's a successful H because the Power Shares DB US dollar bull index hasn't taken out the 2157 low of the week of the 14th of September of this year. So far, that's a positive. It says you can rally, and you can rally to the previous high of the arch high. Actually, that takes you all the way back to 2230. So I'm watching this very, very closely because this particular chart says that GLD is still in a down move from the peak D top. I think I've got another one here. That's the SPY. All right, that's good enough. And it says the dollar could finally... See the way the dollar tested the low? And you see how weak the GLD was? It couldn't even get back to that low. And the GLD was in a 2.5-year bull market, up channel in the weekly chart. And then it broke out to 184.82, and then it went to a quick 185.85 peak D, and now it's pulled back. 148 was the low, bounced up to the most recent high of 174.07. So I don't see very much in the GLD other than a pop-up. But my bias now is to look at it as continuing to make lower highs and lower lows, even if there's a counter trend rally. In other words, I'm open to some kind of a bounce, but I'm not open yet to say that there's a change in trend that is significant other than a bounce. And the bounce, when one says a bounce, the implication usually is that you're expecting at least a test of the recent low or lower lows to come. So I've got those things out the way. I'm going to run numbers now as we go into the next break, and then we go into the final break. But I wanted to show you using the black background chart. And I did that for a specific reason. Of course, at this particular point, I forgot the reason. The euro. The EUR-USD, just wanted to show that right now, is made a peak E, but it's a high-level consolidation. The USD JPY, you remember what I was discussing on Friday? Not Friday, on Thursday? I said I've got a potential for a peak E coming up in the USD JPY, but the MACD and stochastic are still so strong, and the weekly chart is so strong that I don't think it's going to be more than a consolidation. So there's the chart. Now I'm going to show it to you in the white background if you want to print this out. Why? Because it demonstrates my technique so nicely. I'm also going to add the 120-minute chart here. I'll be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman. For those of you who trade currencies or you want to learn a little bit about the ChapmanWave methodology, I'm just showing the chart right here. This is the USD JPY. This is the US dollar, Japanese yen. I have a bit of a chutzpah showing this. I don't trade it. I use it only for technical verification. Larry Pesavento is the person you must listen to coming up straight after me. He's the one that trades all these different currencies. He's the expert of this, and I'm just showing you chart formations. Look at this. From the low, the doji low of the 4th of December. This is a 120-minute chart. It goes to peak E. Look at the way the fast-moving average of the MACD worked. Look at the stochastic. It makes a high-level consolidation, and then it goes to one quick sneak up to a peak F/8. Could be an alternate wave count. That is a right arm extension. That is in my CD introducing the ChapmanWave methodology. That is chapter 18, slide 340. It goes into great detail how you're looking at failure in the technicals to give you a suggestion that this could in fact be a single leg up that just fails. Then you start a brand new move, and it starts peak A, B, C, D, and then it goes to a technique called the ChapmanWave Instant Restart. There's no other technique in the world that does this. Why? Because I use my letters. When I get to D, it took me years and a lot of money to find out that, in fact, if it held certain parameters and continued higher within 3 bars, took me a long time to figure it was 3 bars. I'm just saying it out loud here. What cost a fortune. I'm just throwing it out. 3 bars, if it does certain things and goes so high, it can start a brand new buy mode that goes to leg A/E/A, F/B, G/C. You can't go higher than a G in the ChapmanWave methodology. You have to think that you've got to restart, or you've got to go back and find out what was wrong in the wave count, and then it goes to a D, and it gives you a signal, but it's not a sell, anything other than a short-term sell signal, because it doesn't go to a sell mode because of the way the MACD acts, and then it pops up to E, to a doji high back on the 14th of December, and then it pulls back and has another right arm extension. Charts that make certain characteristics, form certain characteristics, can continue doing that, and this is what it does. It spikes up once, it comes back, starts a brand new buy mode, goes to peak A, B, C, D. D doesn't give a sell signal, but the sell signal to sell mode comes in a peak E, and a sharp pullback to a C, and it starts a brand new buy mode. On the 20th of December, it goes to peak A, and that becomes an A minus with an H formation that holds the left side. That becomes a ChapmanWave restart. A lot of questions on the restart I get. Well, this is a beautiful example. Stochastic MACD, doji candles, everything fits. Starts a brand new buy mode to an instant restart. Remember ChapmanWave instant restart? That's in chapter 19, slide 346 in the CD. Then what happens? It holds the 9-period moving average. Now, the only thing in the CD that you don't get is just the moving averages. I discussed them intensely in terms of the MACD and the slow stochastic, because they're made up of exponential moving averages. But the actual concept that I developed as a formula really started just as I was finishing up the CDs. I don't use things unless I've tried them out for a long time to give them veracity. Finally, I did that. So there's a webinar called Moving Averages, ChapmanWave Moving Averages. So what we're looking at is it runs the 9-period, it walks the 9-period moving average, goes to a brand new, the instant restart takes you to a new D, E, and even an F. It goes to an E, pulls back, and now you've got the pattern that I call the double top drop bucket potential, unless it spikes decisively above. The drop bucket double top is a chapter 22, slide 366. It says that if you go right through it, instead of becoming a double top and hold, that is, and you hold for 2 out of 3 bars, that becomes ChapmanWave cup and ladle. Why? Because it makes the cup formation and then forms the handle by going all the way, and that should take you to a leg D. And right now it's in leg F/B. So there's a quick lesson that I just gave, and so thanks for being here. We'll be back. Have a fantastic New Year's Eve. Have a fantastic New Year's Day. But most of all, thanks to TFNN for everything they've done for all of us. And stay tuned for Larry and all the other great hosts, and I'll see you back here in 2013. Let's make it a fantastic year. Thanks for being here. Basil Chapman signing off.
Are you looking